Well, I think that the reaction, any reaction in the dollar-yen critique is going to be a bit underwhelming, even if we get a 10 basis point hike from the BOJ. The reason being that, if you look at recent dollar-yen moves, it's all about the dollar side of the equation. And with the Fed meeting this week, until at least Wednesday, that is going to be the more dominant part of the equation. And therefore, I think that any kind of reaction in the yen is going to be underwhelming. The 95% of the moves in the dollar yen in the past 10 days or so have been driven by the dollar side, by the real rate differentials that are moving strongly in favor of the US dollar. And if the Fed comes out hawkish, I think dollar yen will continue to be bid. If the Fed kind of surprises on the dovish side, i.e. they keep 3 rate cuts on the table, then I think that the yen will find a bid, though that will come after the BOJ, not immediately.
Let's talk a little bit about the Bank of England. Helen Jewell was on the programme a little bit earlier on from BlackRock, signalling that she thinks if you were to see a surprise this week, it doesn't come from the SNB, as we've been discussing, it comes potentially from the Bank of England. Then walk us through the reaction if the Bank of England turns out to be more dovish and starts signalling cuts. Walk me through what happens with gilts, walk me through what happens in terms of the shape of the curve and that sterling story.
So, Guy, I mean, if the BOE is going to be very dovish, I think that will be very bullish for gilts, especially front-end gilts. Now, gilts have performed pretty well this month, and I will expect that to continue if the BOE is dovish. Though I think we need to be clear about what constitutes dovish in the case of the BOE. The BOE has already said that it is desirous of cutting rates. So they've already let the cat out of the bag. So there is no more cat to let out of the bag, so to speak. So they are waiting for inflation to settle down. I mean, they're expecting inflation will touch 2% at some point in the spring, but it's a question of what happens to inflation after that. I do expect that inflation is going to touch down and do a go around. So I do think that, the case for the Bank of England to cut rates a whole lot from here is not very well founded, I'm afraid.
Ben, on the Fed, because you've written about this extensively over the last few months, the fact that there was a need for a catch-up, particularly on the 2-year, as we face up to a Fed that's going to hold higher for longer. We have the meeting, the decision on Wednesday. We have the revisions around the forecasts. Is there further to go in terms of the sell-off at the front end, or are you comfortable at 4.7 on the 2-year?
I think 4.78, we discussed, Tom, a couple of weeks ago on this program that 4.78 was the likely level for the 2-year. We are doing 4.72 now. So I do think that if the Fed takes back one of the rate cuts that they had penciled in with the new dot plot, I think that Treasury 2-year yields will go to 4.78, maybe 4.82, based on more recent correlations after we spoke. So 4.82 is about where they're going to be capped. It's not going to go a whole lot from here. Much of the repricing has happened last week, and therefore I expect that 2-year yields do not have very much room to climb here, even if the Fed proves to be hawkish this week.